What you see over here is Bitcoin's long-term development, right, on a logarithmic scale. So each move over here is a 10x. And what we see here in color is how long have Bitcoin actually been held by various parties. And this is very, very interesting, right? Now Bitcoin is at roughly 20K. Things look bleak, but when in doubt, we should always zoom out. And what gives Bitcoin real value? It's the long-term brand, the support by the long-term adopters that is increasing with time. People that invest in Bitcoin and believe in it over the years and decades, they keep their money in, making the supply for the speculators tighter and tighter, and thus also pushing up the price. Now let's look at the hodl wave for all the Bitcoin that hasn't moved for 10 years or more. We see this is constantly increasing, currently at 13%. So I'd consider this as pretty much the lost Bitcoin. At least more and more Bitcoin is moving into this age band. So really the 21 million Bitcoin that everybody is talking about is not really a threshold. It's not really what you can buy. Lots of those Bitcoin might never move. Now we can even add more age bands to this, and we can see how this is also pretty much constantly rising with time. So when we look at the Bitcoin that hasn't moved for at least 5 years, now we are already at, say, 25% or so. So 1/4 of the Bitcoin. Now, when you extrapolate this out, right, then you see that over the years, less and less Bitcoin is available for trading on the centralized or decentralized exchanges. So new people entering the space will create new all-time highs. Now let's look at those new people entering the space, because that's pretty much the short-term speculation, right? Let's look at the Bitcoin that has been active in the last 12 months. And we see this tends to decline over time, right? It's now at roughly, say, 35%. So 1/3 of the Bitcoin is actively traded. We can also see that when this is high, the price tends to be high. So a lot of short-term speculation means a bubble is forming. Once people hold onto their Bitcoin, they're not speculating that much anymore. That's when the price tends to go down. So you want to be buying when speculation is low, which is currently the case, right? We are at all-time lows here. So dollar cost averaging is really a bet on this graph to continue to go up. It's a bet on Bitcoin staying a long-term investable asset, an asset that can always find a price floor because there is a strong base that simply doesn't sell that quickly. But note how the waves become stronger the shorter we go on this time frame, right? When we are looking just at the Bitcoin up to 5 years, this is constantly increasing. Once we add more age bands to this, we actually see quite significant drops. So people that invested in Bitcoin beforehand, they are basically selling off during the rally, taking profits. So let's take just the middle age band over here, the people that try to swing trade the macro. They seem to be pretty successful at this, right? They are selling off constantly while the price increases. Once the price doesn't increase anymore, they're accumulating and they're buying in. So it's not necessarily easy to figure exact tops and exact bottoms, but it is relatively straightforward to predict that this long-term holder graph is going to rise over time. And that's then what creates this long-term trend. And so when you believe that this will simply continue, what this means is that the current risk versus reward is really, really good. Maybe in the worst case, we could go down to, say, 10K, right? Another 50% drop. But in the best case, we could see new all-time highs. So a minus 10K versus a plus 50K. And I'd even argue that given the inflation and given the long-term holding of Bitcoin, that the bullish scenario is even more likely than the bearish scenario. So you've got really nice positive payoff in case things go well. And you've also got the odds on your side that the positive scenario will actually play out. All of this bearish price action, right? These 80% drops, they are not created by the long-term holder adoption. They're not created because there's a doubt that Bitcoin will still be around. Long-term holders, they stick around. All of that volatility, which is of course massive, all of that volatility is simply created by the short-term money, by the people that only hold Bitcoin maybe up to 6 months. They are the ones that enter the space, that push up the price, create the bubbles. They are the ones that then exit the space, that create downward pressure. And so there's two solutions to this. You can simply just ignore this, or alternatively time those cycles somewhat and only sell when short-term speculation is high, which is obviously currently not the case. So I'm not on the seller side, I'm on the dollar cost averaging side. I continue to buy, and I'm looking forward to see those 70K one day again. If that takes 6 months or 6 years, I don't really care. I'm simply interested in the long-term dynamic, and that's an ever-increasing tightening of the supply simply because people store their wealth in Bitcoin over the years. Feel free to subscribe in case you enjoyed this video. And also feel free to join our Telegram channel. Simply search for Bitcoin Strategy channel within the Telegram app. There's also a premium membership where you can see what kind of altcoins I trade, how I time the overall market. You can also contact me here directly. The link is thebitcoinstrategy.com. Thanks for watching and see you on the next one. Bye bye.